$25,000. That is how much some Americans can now legally remove from their taxable income, just from tips alone. The government added this in 2025. Most people filing their taxes right now have never heard of it. There are 5 others just like it. This video covers all of them. To understand why this year is different, you need a quick bit of history. Back in 2017, the government passed a big tax law. It cut taxes for most Americans. Lower rates, bigger standard deductions, more money in your pocket. But there was a catch. Those cuts were only temporary. They were set to expire at the end of 2025, which means without action, 62% of American taxpayers would have seen their taxes go up this year. That did not happen. In July 2025, on the 4th of July to be exact, the One Big Beautiful Bill was signed into law. It made those 2017 cuts permanent, and on top of that, it added new deductions that never existed before. Some of those new deductions apply to your 2025 taxes, the ones you are filing right now, which means the window to claim them is open, but it closes on April 15th. Let me go through every major change one by one. Simple words. Real numbers. No confusing tax language. Deduction 1. The standard deduction. When you file your taxes, you get to subtract a certain amount from your income before calculating how much tax you owe. This is called the standard deduction. It is the number most Americans use, about 90% of filers. For your 2025 taxes, the standard deduction is now $14,600 if you are single, $29,200 if you are married filing together. That is higher than it was before, which means a bigger chunk of your income gets protected from tax. You do nothing different. It is automatic. But the next ones, you have to claim them. Deduction 2. No tax on tips. If you work a job where customers tip you, a restaurant, a salon, a hotel, a delivery service, you may now be able to deduct up to $25,000 of those tips. What that means in plain language, that tip money does not count as taxable income. You earned it. You keep more of it. Now, there are rules. Your total income has to be under $150,000. The job has to be one that the IRS officially recognizes as a tipped occupation. The IRS published a list of 68 qualifying job types in October 2025. If your job is on that list and you made under $150,000, you likely qualify. This deduction runs from 2025 through 2028. Claim it now. Deduction 3. No tax on overtime. If you worked more than 40 hours a week in 2025 and your employer paid you time and a half for those extra hours, you may be able to deduct that overtime pay from your taxable income. The maximum is $12,500 if you are single, $25,000 if you are married. Important detail, it is only the extra half, so if your regular rate is $20 an hour and you get $30 for overtime, only that extra $10 per hour qualifies for the deduction, not the full $30. Your employer should have reported this on your W-2. Check your W-2 for the overtime amount. If it is there, you can deduct it. Deduction 4. Car loan interest. Did you buy a brand new car in 2025, one that was built in the United States? If yes, you may be able to deduct up to $10,000 of the interest you paid on that car loan. Most people do not think about car loan interest as a tax deduction. It has never been one before. This is new. The rules. The car had to be new. Used cars do not qualify. Leases do not qualify, only loans. The final assembly of the vehicle had to be in the United States. Check the sticker on the window or look up your VIN on the NHTSA website to confirm. Your lender is required to send you a statement showing how much interest you paid in 2025. That number goes on your tax return. Income limit. Under $100,000 single, $200,000 if you are married. Deduction 5. The senior deduction. If you are 65 or older, this one is specifically for you. On top of everything else, you now get an additional deduction of $6,000. If you are married and both of you are 65 or older, that is $12,000. This is separate from the standard deduction. You get both. The income limit here is lower. It phases out if your income is over $75,000 as a single filer, or over $150,000 for couples. If you are on a fixed income in retirement and you qualify, this could be the most valuable deduction on this list for you.
And a bonus one, the child tax credit. One more if you have kids. The child tax credit, the money you get back per qualifying child, has been permanently increased from $2,000 to $2,200. If you have 2 kids, that is an extra $400 coming back to you. 3 kids, $600 extra. It is not a deduction. It is a direct reduction in your tax bill or added to your refund. This one is permanent. It will be there every year going forward. Now here is what most videos about this topic will not tell you. Every single one of these new deductions is temporary. Tips, overtime, car loan interest, the senior deduction, they all expire after 2028. 3 years from now, they are gone unless Congress renews them. The government named this law the One Big Beautiful Bill, but nobody in Washington is going to call you personally and remind you that these deductions exist. And if you do not claim them, you do not get them. There is also this. The IRS is currently operating with 9% less funding than last year. They have fewer staff processing returns, which means if you file on paper, expect delays. File electronically, file early, track your refund online. The rules are in your favor this year, but only if you know how to use them. Here is exactly what you do before April 15th.
Step 1. Check your W-2. Look for any overtime pay your employer reported. If it is there, you can deduct it. Step 2. If you work in a tipped job, check the IRS list of 68 qualifying occupations at irs.gov. If your job is on the list and you made under $150, claim the deduction. Step 3. If you bought a new U.S. assembled car in 2025, find the interest statement from your lender. They were required to send it to you by January 31st. That number goes on Schedule 1A of your tax return. Step 4. If you are 65 or older, make sure your tax software or preparer knows about the $6,000 senior deduction. It does not show up automatically in every system yet. And if your income is under $89,000, you can file completely free at IRS Free File on irs.gov. No cost, no catch.
The tax code is long and complicated on purpose. Most people do not have time to read it, which is exactly why most people leave money behind every year. Not this year. You now know every major deduction that changed in 2026. You know the rules. You know the limits. You know what to check. Claim what you are owed. If this helped, subscribe, because every week we break down one more financial system that was never properly explained to you. And the next one is about something that has quietly been taking money from your paycheck since 1913.